marketplace. We have KFin Tech management now joining us. The company has announced that it will buy a 51% stake in Ascent Fund Services. We have Sreekanth Nadella, the MD and CEO of the company, now joining in. Sreekanth, thank you very much for your time. Good afternoon, and congratulations on the acquisition. Could you tell us a little bit about the company that you're acquiring this 51% in, and what do you hope to do with it? What are the synergies, and how will this add to the business at KFin Tech?
Very good afternoon, and happy to be here. KFin Tech has entered into a definitive agreement to buy Ascent Fund Services. It's a Singapore-based fund administrator. As you could be aware, KFin Tech is in the capital market infrastructure space. We are the largest registrar and transfer agent. We manage about 60% of the mutual fund houses in India. We're on the share transfer side as well, managing the IPOs in the secondary markets, also managing alternatives. That's broadly the role that KFin Tech plays in the capital market ecosystem. It had been our stated goal over the last 5 years to create the country's first and largest global fund administrator at scale. Today, if you see the capital markets ecosystem beyond India, you have several large fund administrators. Many of them are bank-based administrators. Some of them are pure play fund administrators. They combined manage close to about $90 trillion worth of wealth globally. And in that context, they offer services such as transfer agency, which is everything to do with investor servicing, and fund accounting, which is basically net asset value computation, so on and so forth. Given our plan to grow globally, over the past 5 years, KFin Tech had started organically growing itself, right, in Malaysia, Philippines, Hong Kong, Singapore, and Thailand. We have about 80 clientele, but we constantly look at opportunities to expand the international space as frequently as we could. And given it is a highly regulated space, sometimes acquisitions make more sense than organically growing. In that context, we've been evaluating several assets, and one such asset, is Ascent Fund Services. It's based in Singapore. It's a reasonably young organization, started in 2019 by 3 young entrepreneurs who have scaled up the organization quite well. Today, they manage about $24 billion worth of assets under administration. The company has, grown its revenue profile from nil to near about, $15 to $16 million in a very short period of time, and has scaled to be present and manage clients across 18 different countries, regulated by 6 different administrators, whether it is the Singapore administrator, Dubai, Abu Dhabi, Cayman Islands, so on and so forth. So it is a hugely complementary asset acquisition by KFin Tech. We intend the deal to be closed over the next 5-year period. And as such, it is first big step for KFin Tech towards being a global fund administrator.
Sreekanth, so the first step, you're acquiring a 51% stake for nearly $35 million. But you will be acquiring the balance 49% in FY 28, 29, 30, based on certain, if you achieve certain EBITDA, certain EBITDA requirements. If those are achieved, what is expected to be the total payout?
So should they be, so we're looking at a range anyway between about 110 to $170 million with the total payout, entirely dependent on the margins that the organization will deliver in those 3 years.
And the current revenues of the acquired company, you said, I think is 50-60 million, right?
That's right.
Okay.
So for the period ending, Ascent, year is between July and June, and for the first half year ending January, they ended about $13.5 million. The current run rate is about $1.5 million a month.
And by say 2030, if they are to achieve the EBITDA targets that you've set out and will entail a maximum payout of 170, what is the expected revenue and EBITDA that you're looking at?
The base case submitted was close to about $85 million.
So, sorry, what's the business growing at, Sreekanth? The Ascent?
Prashant, so we're looking at the metrics in terms of 3 broad metrics. One is the number of fund houses and fund managers itself. That growth had been close to about 57% over the past 4 years. Assets under administration has been growing up north of 45-46%. Revenue profile itself has been growing at about 36% over the past 3 years.
So they essentially cater to all global funds, essentially, right?
Correct. So these are the funds that have been structured in Singapore or Dubai or Abu Dhabi, any of these offshore locations, or direct in-house, geographies such as Hong Kong. Yeah.
Okay, because I mean, I'm assuming it's a big financial center, but it's used as a base to invest around the world, not so much in Singapore, but around the world in that sense, right? So this is, and you said 57% is, 57% is the growth over the last 4 years.
Fund managers, yes.
And 40 something in terms of AUM. That's the CAGR.
That's the CAGR, correct.
Okay. And what are margins here, Sreekanth?
So it's a relatively young organization, as I said. They just turned the corner for the previous quarter. They turned EBITDA positive. I guess depending as the scale increases, the margin profile will. Our plan is for it to tend to track towards that of KFin Tech's margins over the next 3 to 5 years.
Just in the immediate term, will there be any earnings cut on account of lower other income and higher non-mutual fund revenues? Some of the analysts we spoke to seem to indicate that at least upfront in the first year, there would be an earnings cut of 2 to 4%.
I do not anticipate that. We are, funding this entire acquisition entirely through internal accruals. Right, that's about roughly 300 crores of cash. We believe it will be EPS accretive even in this year, albeit marginally so, given it's already EBITDA positive. I guess so long as our treasury income, we get about 4 to 5% return beyond the treasury income, we should be, EPS accretive this year too.
And what will be the contribution of your international revenues that you anticipate, say, 5 years down the line, given the inorganic aspirations and the organic growth?
So we started the international journey for 2 broad reasons. One, over-dependency on one country and on one asset class, which is mutual funds. And we believe it just makes prudent financial decision to diversify your risks. And the diversification was one across business processes. Instead of just doing RTA, do also fund accounting, digital technology, data. Instead of just one country, India, be across multiple geographies. Instead of just mutual funds, be across multiple asset classes. So from that context, we believe that we wanted to get to close to 50% of the total revenue book to come from international in the near term or medium term, if I may. Right, that's anywhere between 5 to 7 years. With this acquisition, once the acquisition is completed over the next 3 to 4 month period, the total share of international revenue to overall KFin Tech's revenue would be up north of 25% already. Over the next 5 years, should we execute to our plans well, we should get anywhere between 40 to 50% of the total book to come from international.
More acquisitions in the pipeline, Sreekanth? Or you think this one, at least till you get this done?
No, we continually, evaluate potential targets, Prashant. I know, and we look at acquisitions, from the lens of 3 different angles. One is, to drive certain amount of consolidation, which is basically in the same business, buy out smaller entities, which can help us drive both the, top line and bottom line. Second, new geography expansion, which is where I suppose Ascent acquisition will come into picture. The third one would be a completely new product line or a business line, where we haven't been. For example, our past acquisition of Hexagram is in that regard. We have a very active M&A, and a board orchestrated committee. So we continually look at it. At any point in time, we have 10 different assets we are looking at, and it could fall into any of those categories. Yes, it is possible that we can have more. But first and foremost, of course, we need to complete this transaction. As you know, it's a highly regulated business. We need a whole lot of regulators to clear this, and about at least a couple of quarters for integration and cultural alignment, so on and so forth. But along the way, we'll continue to evaluate more.
But it should get done, right? You have assurances. I mean, it'll be, the regulatory part of it, because you say, it's a very, very regulated industry and it's a foreign entity, but it'll get done. It's just a matter of time, right?
Yeah, we are very confident. There are no reasons why it should not.
Okay, all right. Sreekanth, thank you very much. Good speaking with you. Appreciate you joining us here on CNBC-TV18. Good luck with that business. We'll take a quick commercial break here. Markets, of course, up about 300, 24,150 is where we're at. Vikas Khemani with us on the other side. Stay tuned.